Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, August 27th. Hope you guys are having a great day today. It's been a busy day on the markets. We had a lot going on here, and we'll jump right into. We'll start off with economic reports, and then we'll get into the headline. And every Thursday, we get the initial jobless claims. So last week's report came in at 1.104 million people applying for unemployment benefits, and this week it dipped down. So we came in at 1.006 million. So unfortunately, we didn't hit the below million mark, but at least it went in the right direction this week. We also got the second look for the GDP for the second quarter. The final revision will come out next month. And the first one came in at minus 32.9%. Forecast was calling for a second look at minus 32.5%, and actually improved more than what the forecast came in at minus 31.7%. Last but not least, we got the pending home sales for the month of July. In June, we had a real huge increase, a 15.8% increase month over month, and in July, from June to July, it went from 5 up to 5.9%. So very good numbers overall here. What we're seeing here, these are all going in the right direction, which is positive. So let's go ahead and take a look at the headline news. Right now, stocks are mixed. They actually were up earlier this morning, and then all of a sudden the Nasdaq went into negative territory. We had the Jackson Hole speech with the Fed Chair Powell. Made some big monetary policy changes, and we'll step into that. But before they were kind of trading lowly, and then they went up, stocks were taken off a bit. And then since, just as I'm kind of getting these slides, they've scaled back. The Dow was up over 200, now it's down to about 165. Nasdaq was a positive, went to negative territory. But essentially what he did, the monetary shift is what he's doing, is that he's going to, instead of just a strict 2% policy on or 2% target rate for inflation, he's going to use that as an average, and then he's going to place employment over inflationary data. So what what that means is that there could be times over the term of the year where we could be above 2%, and then there's also times where we'll be below 2%. But he's going to try to keep that as an average going forward, and trying to stimulate the economy to get more jobs placed. And this is kind of where the new environment is going to be taking shape. Is that he's placing a big emphasis on trying to do whatever the Fed can do to get jobs created and people back to work and everything. What they're also saying is that, however, with inflation, if it does appear to be getting out of control, they will hesitate to get back into the market to go ahead and raise rates if they need to. If you're not aware, the Fed lowers rates to stimulate the economy, which will create inflationary data. But when things are going too well and then inflation's starting to get out of control, that's when they raise rates. So they won't hesitate to step in if they need to start raising rates to control inflation if it looks like it's getting out of control. They want to try to keep that average. So let's go ahead and take a look at the mortgage-backed securities. The mortgage-backed securities did like that. However, when the market shifted, investors were shifting money from mortgage-backed securities and everything else back into the stock market. So the inflation talk actually calmed the mortgage-backed security or bond traders. However, due to the higher equity, what they could get into the equity market, is they shifted their funds over there. So we got money moving out of mortgage-backed securities. Right now, we're down about 19 basis points. We're also challenging this 50-day moving average. So as we saw here, we were up earlier, but right now we're down 19 basis points. This will translate to higher pricing for interest rates as a result of that. So let's take a look here at the yields. Yields broke above the next level here. This is a one that we've been talking about yesterday. It was really important. We want to keep below the 73 here because if it breaks above this, this becomes a floor of support. And this will add more pressure to mortgage-backed securities, therefore increasing rates, trending the rates higher over time here. And right now we're just a hair under 0.74, and we were actually at 0.74 earlier, but it has subsided a little bit. So we'll wait to see how the day shakes out. But I think what you're seeing is that some money in the stock market, even though it's in positive territory, pulled out. I think you'll see money coming out a little bit as they reassess all the different data that the Fed had said and trying to reassess things before they put money back in right now. So I think you kind of see this point where they're reassessing, reevaluating where their positions will be, if it's going to be mortgage-backed securities or into the stocks and stuff. So that's where you kind of see it. Stay tuned if you guys are in the mortgage industry. I mean, if you're looking to get any mortgage information, if you're looking about different programs, looking about questions about pre-approvals or refinances and stuff like that, I am a loan officer. I work with a national lender. I will leave a link at the end of this video as well as in the description. You can go to click on there. If you have any questions, you're welcome to contact me through that website, and we can discuss on how we can assist you if you're looking to get pre-approved. If you guys are buying something, we like to need financing. If you're looking to refinance, we can certainly help in all those directions. So please feel free to stay tuned, and then check on the website, and then go ahead and whatever information that website did not provide and want more information, again, please feel free to reach out. Have a great rest of your day. Thanks so much for watching, and we'll see you in tomorrow's video. Bye-bye.